Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and our toll-free number 800-951-0592, the website at allamericangold.com, and it is Tuesday, and you know what that means, yes? It's bowling night tonight. This is the night. We haven't won a single match all year, but I'm feeling lucky tonight. I've taken my CBD. My body's ready to go. My teammates, we're ready to win, Jason. We are winless on this. This is the final regular season matchup in our bowling league tonight, Jason. It's our last chance to win a match.
You know, I played on football teams where you get one win a year. That was usually kind of the allotment. If your things were really bad, you couldn't even get one win. And I always remember that one game we won. It was like we won the Super Bowl every time, that one game.
I'm going to say this. There will be a lot of celebrating by me if somehow we can actually pull this victory off. You know, because we're that team in the league. You know, we're the have fun team. You know, we're team fun, and I'm just praying because then the playoffs start, and that just means we're not going to win. So this is it. This is our big shot. The good news is the following week, win or lose, you get free pizza.
That's all right. That works good. We had a little bit of that on Friday for the event, so that always comes in handy, Joe.
Yeah. So this is it. I'll let you guys know. But we were really close last week. You know, we were going into the final game, and it was 1-1. Normally, we don't even have a chance to win. And then, let's just say we got killed. But anyhow, I know that a lot of you out there listening care about my bowling and pickleball exploits. I was on the golf course yesterday. And let's just say that Helen Keller probably putts better than I do.
Putting is probably the only thing I can do with golf, Joe. I've never even really taken a good swing at a golf ball. I'd probably embarrass myself.
So, I'm not laughing at you because I played a lot of golf in my life, and a lot of people would be like, "Wow, that's your swing?" Yeah. So I understand where you're coming from. Yeah, but the overseeding, some of the courses are opening now, and cart path only. So I did a lot more walking yesterday. So I'm hoping that that's just prepared me for the big bowling match tonight. And like I said, I took, you know, I'm all CBD'd up. I'm ready to go. Speaking of ready to go, gold's up about $10 this morning. The Dow, we'll see. It's early. But they've been on this losing streak here. But right now, Jason, the Dow is up 34 points. But crude oil continuing to not cooperate. Crude oil's higher, natural gas is higher, gasoline is higher. Pretty much most of the energy complex higher again this morning. We've got news out on that. We're going to also talk about the Chinese bond market. Some more rumblings there. Then yesterday we talked about how the coal shortage is growing. Obviously China, we know about Europe. Now India is having problems. The price of coal in China today hit a new all-time record high as we continue to monitor these things. You know, when you have energy products, and I don't care if it's natural gas, coal, oil, but when you have them doubling and tripling in a matter of months, that is a very bad indicator of things to come. And then this morning, if you like crab, I highly suggest you go buy some today and stick it in the freezer. Apparently, the Bering Sea, I don't know if you watch Deadliest Catch. If you've ever seen that program on Discovery, the crab report, Jason. The crab report is in, and there are no crab. And the quotas for crab, and I know, and I don't know that this happens very often, but the quotas for this year's crab season were cut 88% in the Bering Sea.
Wow. And when you talk about the way you're talking about it, it reminds me of trading places. Remember in the
right
the
orange juice futures.
There was the orange juice report, and the Dukes were going to use it to their advantage. It just seems strangely familiar, Joe, that you're giving people warnings about stuff that continues to get worse.
I was just like, well, of course, it just fits with everything else, right? You know, the amount of farmers now being paid not to plant crops along and this is like Wyoming, Colorado, into Arizona to try to preserve that precious water in Lake Mead and Lake Powell. Now they're getting paid upwards of $900 an acre not to plant crops. And I'm just thinking, wait a minute, right? We've got food prices skyrocketing, and the solution is, hey, let's pay farmers to plant even less.
Yeah, that's once again, things are very, very wrong, Joe. I mean, we're going to talk about a bunch of stuff today, Joe, and things are very bad. I think we're not even close to how bad it's going to get, Joe.
Yeah, well, when we get back, what's going on in China's bond market? That's coming up next. 800-951-0592, Patriot Radio News Hour. Joe Jaquin, Jason Walker here this morning, and we'll get back to other information in a minute. But there's so many things happening, and you don't know where to focus. Right? What do we look at? Like today we had the JOLTS number out. That's help wanted, if you will. Fell by almost 700,000 jobs, and get ready. That number is going to keep falling here. The amount of people quitting jobs hit an all-time record high, and of course we're talking about inflation and what new all-time. Every day it's a new all-time record high on something. But we're going to take the next segment here and go back and start looking at the bond markets in total. The U.S. 10-year note seemingly can't get above 1.6, even though the Federal Reserve is saying, hey, we're going to start taper, and a couple of guys put a dot, filled in a dot on a chart saying, hey, we want to raise rates sometime next year, which is never going to happen, but neither here nor there. But then, we brushed, what would you say, Jason, a week or two ago, we were talking about Evergrande in China, China's second largest property developer. Yesterday, there was major problems in the Chinese bond market as some of these lesser developers are not paying their bonds, and we want to touch upon that again this morning.
Yeah, Evergrande, for example, is 11 days away from actual bond default. So that might help you with why you're starting to see some of the rumblings, Joe. 11 days. There's no way out.
Right. So we know that they've missed payments. But, like a lot of things, okay, you missed them, but there's a grace period, right? You got to make, we'll give you missed the official day. We're going to give you 30 days. And this 30-day grace period, Jason, running out.
Correct. The Chinese housing market is the biggest Ponzi scheme besides fiat currencies like the Federal Reserve. The Federal Reserve note. If you take the money aside, it's the biggest Ponzi scheme in the world right now. The bubble that is the Chinese housing market is the bubble, the one bubble to rule them all. If you ever watch Lord of the Rings, the Sauron, the evil menace, gave rings to the elves and the humans and the dwarves, and then he made the ring to rule them all. I can show you, Joe, that it looks like that this housing bubble, and it's a Ponzi scheme, is about to be probably the worst thing that's ever hit the markets. Lehman Brothers is going to seem like just a walk in the rain. This is a storm coming, Joe, a massive storm.
It's going to be very interesting how China plays this out. And I think everybody's trying to guess what the Chinese government is going to do because these bonds, it's a mix. And what I mean by that, it's a mix of currencies. Some bonds are, what we say are renminbi bonds. In other words, these are payable in the Chinese currency. But the thing that makes this unique, and this is one of these things where I always worry when when you think about NAFTA, you got to go all the way back to the because they were talking about New World Order and all this stuff.
That's right.
Is in the 80s, right, and then came to fruition kind of in the 90s, where really the play was J.P. Morgan and Goldman Sachs and all these banks. They wanted to tap the Chinese market.
Yep.
And as China was developing, most investors were like, we're not interested in buying a renminbi bond. So a lot of the bonds, the loaning, was done in dollars, which was great. The bank, and again, they all knew this. Hey, we're going to get a slice of it. They need a dollar-denominated bond, so our bank has to be involved. And even if it was just for some scraps, China, that's a lot of scraps. That's how big China is. Even if it was, hey, we're just involved just enough just so we can issue the dollar bonds, we still were getting sliced on a lot of slices.
Yep.
The speculation is that China's going to possibly let the dollar bonds default. And then seemingly, kind of like our central bank now, but they at a government level, they'll buy all the renminbi bonds to keep that part of the market going. What are your thoughts? Do you see something like that, or do you think this is going to be? No, you know what? The Chinese government's going to let it all go.
I think they're going to let it all go, Joe. All of it. I think that, let me do this. I got two parts here. This is this will blow your mind because this information, a lot of it just came out. Goldman Sachs and some other banks ran some worst case and best case scenarios for the Chinese housing market, and then China just released some housing data yesterday. And you won't believe this, Joe. And I'm putting this information in reverse from how I got it because how big the market and the Ponzi scheme is, I'm going to put that after, which is it's going to blow your mind when you hear how bad this thing can be. Goldman Sachs ran two best case scenarios and one worst case scenario. So I'm going to just leave the best case scenarios out. Let's just go to Goldman Sachs Chinese worst case scenario. New starts will be down 30%. Completions will be down 10%. Sales volumes down 10%. Land sales will be down 30%. 4% contraction in GDP. That is what Goldman Sachs says is the worst case scenario for the Chinese housing market. The new housing market for September just came out for China. 90% of the top 100 China property developers sales declined 36% year over year. 760 billion yuan, $118 billion, down 36.2%. 60% of the developers declined more than 30% year over year. The city of Shanghai is down 45%. Joe, this is really bad because if you look, and I don't have a graph to show you, but if you look at like a chart and you see three different types of assets: property, fixed income, and equity, and you look at China, let's go to America first. America has 34 trillion in property assets, 48 trillion in fixed income, and about 47 trillion in equities, stocks. Those are big numbers. And then if you go to Japan, I mean, just to see how small everybody else is, Japan had, and they're number 3, 10 trillion in fixed income, or in property, 4 14 trillion in fixed income and 7% in equity stocks. China's property market is now it's estimated at 62 trillion for property, only 19 trillion in fixed income and 13% in equities, Joe. Their property is 62 trillion, and listen to this. 62 trillion.
Well, because you just gave out a lot of numbers. So that's double the U.S. property market, or is it more than that?
It's more than double. So when the housing market went and blew up in 2008, the U.S. housing market when it blew up was 25 trillion. It's now sitting at 34 trillion. They're more than double where the whole blow up in 2008 started. More than double.
And again, you got to remember, a lot of these are in dollars. These loans are in dollars.
Yes.
Who knows? It's going to be very interesting to find out which U.S. banks are potentially vulnerable to this.
Well, check this out.
And again,
check this out, Joe. Their housing market is 62 trillion. It's 15 trillion more than our entire stock market, which is massive. Their housing assets are 15 trillion right now more than our stock market, which everyone knows if the stock market crashes is chaos throughout the world. Listen to this. 62 trillion, which is their housing asset level. It's 29% of China's GDP. In the U.S., that 34 trillion, that's only 6.2% of our GDP. When this thing goes, Joe, it's 29% of China's GDP. It's a Ponzi scheme. For example, Fantasia, another one of their large housing developers, is defaulting. They're not making payments on $100 million in loans from the biggest one, which is Country Garden in China. They have loans. Evergrande, Fantasia, Country Garden, these housing companies in China, they're all leveraged in each other's stock. It's a complete Ponzi scheme, Joe. It's the biggest bubble ever. It's gonna. And here's the funny thing. Guess what China did in 2020? They have this thing called the 3 red lines. Have you seen this? They put this in place last year as a way of paying back debt. And basically, it's the pin to prick the bubble. It's almost like they purposely want this thing to happen. In 2020, they put the 3 red lines, which tells you how much debt you have and how much repayment you can or can't make, and how much loans, how much borrowing you can do. The way this housing market works, Joe, by the time you're building an actual building, you've already got that money into the next building project and the next building project and the next building project. By putting the 3 red lines in place, They basically said you're done doing that. You're screwed. We just screwed you. That's what's happening in China, Joe. China's actually.
Well, that's what I've heard, and I've heard this a lot, that the Chinese government wants this to happen. They want to rein in the speculators, if you will, and rein in housing prices because just like here, it's the same thing. Housing's gotten ridiculous in China. And so the Chinese government is trying to lower housing prices and housing costs. And again, I don't think they care.
Nope.
Right? And so what if everybody goes bust? Well, this is what we want, and in the long run, we're the Chinese Communist government, and we can do what we want, and everything's going to be fine, and somebody else is going to be left holding the bag. But here's the bigger thing. So outside of who's going to pay and this and that and the other, because that's one side of it. If China's GDP goes negative, which is what Goldman Sachs's worst case scenario is, this is going to be, when we talk about, listen, we know the whole world's got bubbles going and all of these things, and we know, we'll use Goldman Sachs as an example. They've been lowering U.S. GDP now seemingly ad infinitum. About every 15 days, they lower the number and lower the number and lower the number. If this is true, and the U.S. is potentially setting up for some form of a recession, and at the same time, China's housing market crashes, this thing could get ugly.
Absolutely. And remember, the Goldman Sachs worst case scenario, the September numbers I just gave you, are already worse than their worst case scenario. They already shot too low, Joe. The September numbers are 36%. Which
is what they always do, right?
Yeah,
I mean, this is common, right? By the time they're telling you we're adjusting the numbers down, right? The downturn's already happened. They're reacting to numbers that have already come out. That's why they're lowering those projections. And normally what we see is there's a whole, multiple rounds of lowering as more and more data comes out. So I think you're right. I think this is just the early stages here. It really could make any slowdown here in the U.S. will get even worse because of what's happening in China. Patriot Radio News Hour. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe Jaquin, Jason Walker here on this Tuesday, and we're just touching the Chinese market. It's important. Never, and I mean never, in the last, well, let's say, since the conclusion of World War II, has there been another economy that's, on par or on scale of what the U.S. economy is? And again, you'll hear, it's the second largest economy in the world, referring to China. And when you do it in dollar terms, there's like a $4 trillion difference. Let's just call our economy about $21 trillion. In dollar terms, the Chinese is about $17 trillion. Just to give you perspective, the Japanese economy's third large. It's only $5 trillion. So there's a huge. It's first and second, and nobody else, essentially.
Yep.
And of course, if you forget about dollars, because let's face it, our inflated dollar right now. In terms of stuff, in terms of consumption, China's actually bigger than us. And we know, and whether, and everyone differs, but probably in the next, say, 5-6 years, give or take, China will pass us in dollar terms as well, and they'll be the biggest economy, no matter how you measure it. But now, all of a sudden, we need to pay a lot more attention to what's happening over in these Chinese markets, because if China's GDP, and we talked about this the other day, listen, they're like clockwork, somewhere between 6 and 7%, quarter after quarter, year after year. If we're going to see a number even remotely close to zero, and heaven forbid a number that goes negative, that's going to have massive implications, not only for the rest of the world, but for us right here at home. It used to be if we got the sniffles, the rest of the world got a cold.
Right, Joe. Yep.
Right? Now we're talking about, wait a minute, we're not talking about sniffles in China.
Mm-mm.
Right? We're talking about, hey, China's got a full-blown flu. I don't want the coronavirus analogy. I don't want to make it, but you see what Jason is referring to here, and we have no idea how the Chinese government is going to deal with this. But I want to bring out, and Wall Street on parade, if you guys don't follow the Martins, you need to. They are, everyone's got different things. Like Wolf Richter, I talk about Wolf Street and how detailed his research is, and he's really, really, really strong like on car markets and inflation and things of that nature. Zero Hedge. They're really, really, really good at picking all these different articles from really great people that do a lot of research and reposting and giving context. And then, of course, when Zero Hedge does some of their own stuff, the research is fantastic. The Martins, Wall Street on Parade. No one does better research that I've seen. If there is, I don't know who it is. But when it comes to the central bank and our actual own banks, I'm going to read you their headline from their latest posting. The U.S. banking system is more dangerous today than it was in 1929, thanks to the Fed's what they call Reg U and swaps. Two well-kept secrets from the Senate Banking Committee. And, of course, the Senate Banking Committee, it's kind of a joke, right? The Senate Banking Committee is supposed to be our government's oversight of the Fed. And as Jason will tell you, the Fed is unique. It's not beholden to the government, right, Jason?
It's a private company for its own profit. That's all it's there for, is to do what any company does. It's to help our stockholders and our rich guys that own us.
Let me just read you the first sentence. Regulation U, which I will tell you until today, I've never heard of it. It's a 1936 Federal Reserve rule. Probably why I never heard of it. That is still in force today. That allows federally insured, taxpayer-backstopped commercial banks to make margin loans for speculating in stocks. So, in other words, as we know, our banks heavily in the stock markets, the bond markets, and are allowed to use margin loans to speculate in stocks. Unlike 1936, however, Wall Street trading houses are allowed to own their own federally insured, taxpayer-backstopped commercial banks. In other words, right, we can use margin to buy to buy our own stock, essentially. That has allowed for a lot of mischief to occur in the making of margin loans for speculating in the stock market. Following the 1929 stock market crash, 9,096 banks that were holding deposits for average Americans failed as a result of insolvency. So now we've got, now think about this, 9,096 banks failed. Of course, there was probably 9,000 that didn't fail, but about half of them failed or so. Today, we've only got about 4,000 banks. And we know that this Fed coin is coming, and they're going to revamp the banking industry as we know it. And how many banks are going to be left after this next one? We'll be back with the Martins right after this. 800-951-0592, Patriot Radio News Hour. Jason Walker and Joe Jaquin here. We're talking about Wall Street on Parade, the Martins, and another great article saying, hey, our banks are far from safe. And, of course, Jason and I have been saying we get the feeling the next one, the number of banks is going to shrink dramatically again. and we've seen this pattern. And a lot of you, and one of these days, I'll have Jason. One of these days, he'll do a show about the creation of the Federal Reserve and really what it was intended to do, which was what happened when they closed the banks and then 9,000 banks didn't reopen. This was all about eliminating competition.
Yep.
And that's exactly what the major banks did and have been doing and are getting ready to do again here with the power of the Federal Reserve. But we are talking about Regulation U and more trading on margin. When you dig into it, the big banks, they do the most of it in dollar terms. But they've got huge deposits. I mean, massive deposits. This is kind of why, and of course, remember when they shut the banks the last time, everyone lost their money because there was no FDIC insurance. When they reopened them, they came up with this FDIC insurance, which was at $1,000 in 1933, by the way. It's now at $250,000. Of course, Jason and I will laugh and tell you how ridiculous that number truly is. Because if you go and look where 90% of all the deposits are, they're only in 10 banks. And they have deposits of trillions of dollars. Trillions. So the FDIC's fund only has like 30 or 40 billion dollars in it. So it can't possibly even insure what they claim that they're able to do. But you know what's funny, Jason? They bring up, you know why they got rid of Glass-Steagall?
Man, I forget. You caught me off guard.
It was a merger.
That's right, yeah.
Between, what was it, Travelers Insurance and who was it? Man, the other company, it escapes me. But they wanted to merge a couple of financial institutions, but that was going to break the Glass-Steagall Act, which prevented banks from getting too big.
Yep.
See, up until the late 90s, FDIC insurance actually had some credibility because the banks weren't allowed to be so big. But they knew with look how, they make a lot of money on mergers. And so they tricked the Congress into allowing Glass-Steagall to go away so they could merge into these mega banks. But here's the problem that they found about Regulation U. They're like, hey, it's really not that big of a deal in these bigger banks. And they bring up, J.P. Morgan and they bring up B of A, and they're doing billions of dollars in this stuff, but they've got trillions of dollars of deposits, so it's not that bad. It wouldn't be something where you're like, holy cow. But where they found the problem, Jason, is in all these smaller banks still left out there. And they're saying, hey, these banks, they may have 5, 10, $15 billion, $20 billion in deposits. But their leveraged loans are almost equal to their actual deposits, Jason.
Right. Yep, and that's a problem.
Which just means the next crash, this next stock market crash, these banks are going to be insolvent.
Yep.
So I'm sitting,
Joe, small businesses across. Joe, if you go even beyond banks, it's the industries, whether it be media or it be whatever, all the small businesses are sitting in the same position. The bigger fish are getting ready to swallow them up, Joe. And this is the banking industry is no different. In fact, it's probably worse.
Yeah, and so as the Martins say, hey, you know what? The big banks, at least on paper, when it comes to this one part, doesn't look, out of whack. It's all the other 2,000, 3,000, 4,000 other banks that have the problem. And again, it just kind of almost like it makes sense here. It's almost like finding that piece to the puzzle you've been looking for to complete that section. There's that one piece, and you're like, why can't I find? And you put it in there, like, uh-oh. Because we've just been speculating for the last few weeks that we think the next crash, there's going to be a huge reduction in banks in America. And all of a sudden, the Martins come out and say, hey, by the way, no one's looking here. Regulation you. But when you look at the smaller banks, the other 4,000 banks, we got a problem here. And how heavily leveraged they are. Which just means, right, they're the next ones to fall, Jason.
Yep, and that's why they call it too big to fail on those bigger banks, Joe, because we know who's going to get bailed out when things get bad. Too big to fail.
Too big to fail is right. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour. Gold's up 1762. Silver's kind of floating around the flat line here at 2260. The Dow is up 20 right now, as they're trying to avoid another day of losses. We just had a terrible 3-year Treasury auction. Jason, foreign demand just disappearing, and we're seeing this problem in the Treasury markets over and over and over again. They're starting to get really short, cold feet at the short end with the, waiting on the Fed. Are they going to taper? Are they not going to taper? It doesn't matter. One way or the other, the other shoe is getting ready to drop. Today I've got, not much. I hate to say it. U.S. $20 gold pieces, 2,095, and we've got about 75 of those at that price. Then it goes up from there. I've got some U.S. $5 liberties at $5.90. And once again, Jason, really just a bizarre market. $10 gold pieces have just disappeared. So the first price point that I have actually available in $10 gold, you're looking at almost $1,100.
Yeah, that sounds, logical. It's going to get harder to get this stuff, and when the spot price starts to resemble more of the physical market, then the premiums may come down some. But I think the premiums may have a little more room to flex the muscle, Joe, because it's just not making sense.
Yeah, we talked about Southwest Airlines yesterday. Is this going to spread? Damage control trying to be done again today. Their CEO was out on TV today talking about, Texas passed the governor an executive order prohibiting any entity from imposing that vaccine mandate. And, of course, Southwest, headquartered in Texas, their CEO said he was never in favor of corporations imposing these kind of mandates, but he said that the executive order from President Biden mandating all federal employees and federal contractors, which covers all the major airlines, that he no longer has a choice. But my question, Jason, is I don't believe that was an executive order.
And he's always got a choice when it comes to private business, or a supposed private business, Joe. He has a choice. There's just no intestinal fortitude in this country for people to stand up. And all the people that have that intestinal fortitude are leaving these jobs now, Joe, and leaving us with no choice when it comes to what we can do around these corporations.
Yeah, and a big picture, one of the cockpits of a Southwest plane was flying the don't tread on me flag. But as the news media continues to report that they're denying this was all of the issues there were about vaccine mandates, just so you know, legally the union has to say that because it's part of their contract. But again, I don't think anybody's buying that either, Jason.
Well, Brian said something really scary on the afternoon show. What if one of these planes crash in the midst of all this, Joe? Then what happens with all the finger pointing? You're right.
Let's not even go there. 800-951-0592. God bless everybody. Listen, Jason and I are coming right back with a half-empty cup of Joe.